Welcome to your Mortgage Insider Update for Monday, November 17th. We are finally going to see some Bureau of Labor Statistics data. It's going to come out for the September jobs report this Thursday. That'll be the first round of very late jobs data that would have come out the first Friday in October, delayed with the government shutdown. The October data will not be released individually. It'll be released when the November data comes out, first Friday in December, which will coincide just right the week ahead before the Federal Reserve's next meeting. So this Thursday will be the first window into unemployment information that has been lacking. This is part of the reason Fed Chairman Jerome Powell decided to squash the inevitability. Basically said it's not a foregone conclusion that there would be another rate cut in December at that time, at the end of October. The government shutdown could have continued through Christmas. Thank goodness that is not the case, with that being finalized last Thursday, or I guess last Wednesday night. Thursday, first day of the government reopening. The wheels of government move slow, so it's going to take them, it looks like, a week for them to release the information. They actually already had all the information before the shutdown, but they're going to push that out to the markets this week, and we will start to see some movement. Right now, the movement has been, in anticipation of no information. It's not good. Mortgage rates, overall interest rates pushing a bit higher. With the lack of information, just the risk is not worth the reward. So until there's new information, we're going to hang tight. Let's take a look. So not a lot of movement to start this week off. 10-year Treasury down 2 basis points. This is after it's been up quite a bit at 4.12. Not too long ago, back in late October, before the Fed chairman squashed the inevitability or the likelihood of future cuts, this was down below 4%, you'll remember. So we've had quite a swing in interest rates overall, both mortgage-backed securities and 10-year treasuries pretty flat. To start this week off, even the S&P 500 is pretty flat. There's a lot of earnings coming out that'll affect the stock market overall, but they are very much, all the markets are watching for the data points that we're talking about here. So on Friday, we kind of took another step back. We actually started the day lower in between the 25-day and 50-day average, and then spiked up and ended the day up here in the upper 4.13, hit as high as 4.14, 4.15 as the day progressed. Today, we're starting off down, and we're sitting right on this, call it a Fibonacci retracement line, basically just a trader's identified place of resistance. This is a spot that has been hit, in the past. Back in October, we saw rates move up and then hang up right on the same level when we broke above that back on November 5th. This is shortly after the Fed's announcement. It kind of battled along this level, and right now we're hoping for better information, or we'll just say poor information. If there's some poor jobs data from September, like I said, dated information, it still would drive the market lower, but the lack of data has really, seen this rise in rates from the low points we saw back at the mid part of October. So stay tuned next week. Subscribe to the channel. Watch the update next week, because we'll see if there's any fireworks from this most recent data. Next week will be the week of Thanksgiving, so not a lot of new information coming out until the first week in December. So we'll really be looking for that second week in December Fed meeting that will take place. We'll know then, are they going to cut the rates anymore or not? If they didn't cut the rates, that would only be either more positive data, like more positive jobs numbers. Unemployment rate doesn't go up substantially. Jobs meet the expectations or above expectations, which are actually pretty low. The jobs numbers, we're expecting 50,000 jobs for September. So that's pretty anemic compared to, hundreds, over 100,000 job expectation over the summer. But we are getting into the winter months. It is typically hiring for the holidays, but this, again, September would have been pre-holiday hiring. So we'll start to see a lot of the hiring and the holiday spending start to come out in the November, and then, of course, beyond through the holiday Christmas season. Have yourself a great week, and tune in for our next update. Take care.